This episode is sponsored by LegacyWealthBuilderAcademy.com. Just to
Good.
get started, yeah.
So, a few myths about the stock market. The first thing is that you can make money very quickly. And I don't blame people, it's just that the whole scene in the Facebook ads and stuff it's all about day trading and crypto and the promises that you're going to make money very quickly. Stock market is very lucrative, but also it's not a casino. You're not buying lottery tickets. So
Welcome, everybody, back to another exciting show, the About That Water podcast, where we help the sandwich generation build strong financial habits so that they can talk about money, spend money, and enjoy their money with confidence. Today, I have the founder and CEO of Legacy Wealth Builder Academy, where he helps busy professionals build sustainable wealth and generate income through strategic options investing. I know a lot of y'all have been talking to me about investing. We need more investing episodes. Here we are. Thank you for coming on the show, Fadi, Habib. How you been?
I am great. How are you doing, Anthony?
I'm doing good. Today's been a wonderful day. The weather's nice. Can't complain. How about yourself?
Good. I'm in near Toronto, so it's getting colder. We're going to start our 9 months winter soon.
Okay. Well,
I'm joking. It's 6
bundle
months.
up. So, now one of the things about for my audience and the person that's listening to you, they either have kids or actually caretakers of their parents, and money is really tight. So, why is options investing something for them?
Okay, so we'll start from the beginning first. The beginning is our educational system pushes everybody to have a 9 to 5. And if you do have a 9 to 5, the chances are really great that you will never be wealthy if you just stop at the 9 to 5. There's a very, very nice book that I read when I was 20, so 30 years ago. It's called Cash Flow Quadrant by Robert Kiyosaki. It's a must read for everybody. And it tells you that there are 4 ways to make money. It's 4 quadrants. The first quadrant is employee, the 9 to 5. And in this quadrant, everything's stacked against you. They take the taxes before you touch it. You cannot write off anything. You're basically exchanging your time to make money for other people. We're going to talk about other people in a second. And then the second quadrant is self-employed. So this person will have a little bit more freedom. That's the doctor in their clinic. That's the carpenter in their shop. That's the pharmacist in his pharmacy. And they have a little bit of freedom, but both of these 2 quadrants exchange time for money. Okay. The right hand side of the quadrant, there are 2 quadrants there. The first one is a business owner, somebody who has a lot of employees, and basically he's using other people's time, the employees, to make money. Think of somebody who has 50 franchises of Starbucks or Tim Hortons or McDonald's. They don't have to be there, right? So that's a business owner. And the last one, which is the best, is the investor. An investor uses other people's time and money to create wealth. Huge advantages of the 3 quadrants that is not in the employee is that they can write off stuff. So your phone, if you're using it for business, then you can write it off. If you're using home office, you can write it off. So there's a lot of different things. So to have the same after-tax money as an employee, you'll need to earn much more than a business owner, for example, or self-employed. Anyway, so I read the book. So I always had a good 9 to 5, good salary, but I don't have a lot of money for some reason. I can't go to all the trips I want. I can't buy whatever I want. So I used to go to 9 to 5. And then after that, I used to invest. I learned how to invest. If your parents are not billionaires or millionaires, then the task is upon you to teach yourself. And you're not going to find that at school. So I used to have 9 to 5. And then after, never really 9 to 5. It's much more than 9 to 5. Maybe come back at 6 or 7. But after that was my time. I spent a lot of time teaching myself, going to courses. So I started with real estate investing. And then I did that like starting 30 years ago. And then 15 years ago, I was completely convinced that anybody who invests in the stock market is an irresponsible investor. And the reason I had that view is that everybody around me was losing money in the stock market.
Yeah.
It seemed like a big casino, and it is. But I thought that there's something wrong with the market itself. I just did not understand the behaviors and that there is a method. I always hear about Warren Buffett and Peter Lynch and all these people who made a lot of money it seems like they have a method, but I don't know what is that. Just everybody around me is losing money. So I went to this course 15 years ago just to prove the guy wrong, basically, just to prove that I'm right and the right way of investing is real estate. And when I did that, I was open-minded. A light bulb came out that actually there is a method.
Hmm.
The fact that a lot of people, and the majority, is using the stock market as a casino, it's not really a casino. If somebody is using, like, if I give you a tool like a knife,
Yeah.
and you used it in the wrong way and cut yourself, that's not really the fault of the knife. It's just you using it in the wrong way. Bottom line is there is a method, and I searched a lot and I found a really good method. I didn't really invent it. I just got the best out of all the courses plus my own view on what it should be. And I learned that there's a way to do stocks. There's something called a good stock versus a bad stock. And it's not because it just goes up and down. And options is a really great way to leverage the stocks if you know how to invest stocks first. So I have this method, and I have a 12-week mentorship program that teaches people who are not looking for getting rich quick. I'm sure we're going to talk about it. There's a lot of myths and a lot of misinformation about investing in the stock market.
Yeah, go right on in, because that was going to be my next one. Like, what are the myths to get started?
So a few myths about the stock market. The first thing is that you can make money very quickly. And I don't blame people. It's just that the whole scene in the Facebook ads and stuff it's all about day trading and crypto and the promises that you're going to make money very quickly. Stock market is very lucrative, but also it's not a casino. You're not buying lottery tickets. So day trading for me is a very sure way of losing money very quickly. And usually the people who share their, I just made $100,000 from day trading, just ask them how many accounts have they blown up. Okay. Blown up means completely made zero. So what I learned is it's not about the ROI. It's the ROI versus risk. The ROI and risk are both two faces of the same coin. They go hand in hand. You cannot disassociate the ROI from the risk. So if you tell me, listen, there's this thing that you can buy and you can win $5 million. Yeah. Huge ROI, the huge ROI. It's called a lottery ticket. Huge ROI, but also have massive risk. If you just look at the ROI, you will sell your house and go buy this lottery ticket. But
right.
The lottery ticket has massive risk because your chances of winning is almost zero. It doesn't change whether you buy a ticket or not. That's how small it is. So the game is not to maximize your ROI. The game is to maximize the ROI, but look at the risk, and you should not be taking a lot of risk. So that's the first myth, is that you can disassociate risk and ROI and that you can make money very quickly. You can do 24% or a little bit more than that with decent amount of controlled risk. And that's very lucrative. You can double your money basically every 3 years, which is really great, but you shouldn't be taking a lot of risk. And it's not a get rich quick scheme. So that's number one. Number two, you are not buying lottery tickets. You're not gambling. You're not going to play blackjack. You're actually investing. And you're not buying lottery tickets, you're buying businesses. So what does this mean? You can't just when you buy a lottery ticket, you don't ask any questions because there's no inherent advantage of one lottery ticket versus the other. It's all random and it's all very small probability that you win. But when you buy businesses, you got to be discriminatory, right? You have to really look at if this business is good or not. Apple is not like BlackBerry. Meta is not like, United Health. So you need to be looking at all of this stuff and evaluating it as a business. You cannot buy something because your friend told you to buy it or because it had been going up a lot. So a business, the main thing for the business to be evaluated on is it making money or not. So any company that is not making money, like for example, BlackBerry, for me is not investable. You are gambling if you're buying something that is calling itself a business, but not making money. It's not a good business. I can buy the products of BlackBerry. By the way, I used to work at BlackBerry.
Oh, okay. I was about to say, I used to have one.
I love them. I worked for 6 years there, but I can't invest in it because the model has not proven itself that it can make money. Okay. The other thing also that is very important is assuming that day trading is the best way. It's not. There's 4 different ways of investing. There's the Warren Buffett way, buying something and waiting for 30 years. It's a great way, but we don't have 30 years to wait. 2 is called swing trading, going in and out in a week or a month. Third is day trading. Fourth is scalping. Scalping is an extreme way of day trading. For me, day trading and scalping are a no-no. It needs tremendous amount of time, like looking at charts all day, 9 to 5, and needs tremendous amount of skill. And I rarely found people who actually can consistently make money. Yes, they will take a screenshot when they make a huge amount of money, but if you look at how much money they lost as well, it's not a consistent way. So my game is really in the long-term investing principles and doing swing trading. Another myth is that the market has to go up all the time. That's a big myth as well. The market breathes, meaning, like for me, I inhale and then exhale. It doesn't matter how long the inhale is. At some point of time, I cannot live without exhaling, right? So if a mother thinks that there's something wrong with exhaling, when she sees her son or kid exhaling, she will think there's something wrong and she will get a doctor. In the stock market, it doesn't go in a straight line. Overall, it goes up by about 11% every year. That's for the last 100 years. So we know that it's going to go up, but it doesn't go up in a straight line. The statistics show that it's about every 4 years, there's 1 year down. We know that. We know that twice a year, it's going to go down by 5%. At least once a year, it's going to go down by 10%. At least every 15 months, it's going to go down by 15%. Every 2 years, it's going to go down by 20. We know the statistics. Sophisticated investors do not panic when it goes down, when it corrects. It is normal. It is completely normal. And the reason it is normal is that the stock market behaves extremely differently in the short term versus the long term. In the short term, I want you to think of the stock market is that a bunch of teenage drunken kids having a party. That's really that it is. It has nothing to do with how good the companies are. Most people are day trading or going in and out and looking at a quick buck. It's based, the stock market goes up or down for a certain stock. It's basically the tug of war between the buyers and the sellers. If the buyers win, then the stock market, the price of the stock will go up. If the sellers win, more sellers than buyers, the stock market goes down. So it's totally dependent on the sentiment of the people on that day. So for example, Meta is a great business, pumping a lot of profit, pumping a lot of revenue. But if COVID happens, Meta will go down. Why? Has nothing to do with the ability of Meta of generating profit, right? If there's a war in Ukraine, Apple will go down. The whole market will go down. But why? Apple is making a lot of profit. There's absolutely no risk on Apple from the war in Ukraine. Why would Apple go down? It's because it depends on the sentiment of the people. If the people are afraid, they will just dump and sell. So understand that in the short term, Peter Lynch told us that there is absolutely no correlation between the value of the stock, the worth of the stock, and the price of the stock in the short term. By the way, short term is 2 years. So you can have a really good stock like Meta, and you will see it going down, 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 or a good stock going up. There's absolutely no logic to it because it's based on the sentiment and the hormones of everybody in the market running headless. So you should not be looking at the price of the stock to see that it's a good stock. It has nothing to do with it in the short term. Peter Lynch also told us that in the long term, there's 100% correlation. Listen to this. You can make a lot of money out of this. There's 100% correlation between a good stock, the value of the stock, and the price of the stock. So if you have a good business, even if it's going down in the short term, meaning a year or two, if it is a good business, meaning it has a good moat means it's not easy to go and take their customers, and it's have a lot of revenue, it has a lot of profit, then it cannot help it but go up on the long term, which is 5 years. Understanding and discriminating between what is a good stock and a bad stock. By the way, traders don't care about if it's a good stock or not. They will do anything. They just look at the volatility of the stock, meaning they want a stock that moves up and down very quickly so that when they go in, they can sell it after a day or so, make money. It's just not a really consistent way of doing stuff because it's very random, especially that it depends on the sentiment of the people. Knowing a good stock, an example of that is Meta, for example. At some point of time, I think starting at 2022, it was at $400, and it's a really good stock. Lots of revenue, lots of profit. 2022 went down to 80, lost from 400 to 80, so lost 80% of its value, its price, not value. If you don't understand that this is a good stock, you will do like everybody else. You will be selling, thinking it's going to go down to 20. But if you understand that this is a good stock and that it will go up eventually because it's really good stock, everybody who knows anything about the stock market that I know was running around trying to get any money they have to buy such a good stock. The normal behavior of a person in the stock market is that they will buy at the top, wait till it goes down, and sell at the bottom. That's the normal. If you leave yourself without any logic, or just like there's no method, that's what it's going to end up doing. And it's being manipulated. So yes, it's a casino, but not everybody there should be treating it as a casino. There's a way to invest, because if you go into it as lottery tickets, what you will get is a casino and results of a casino. You cannot win in casino. But if you go as an investor and you discriminate and you find the skill of figuring out what is a good stock versus bad stock, and what is a cheap stock versus, by the way, Meta right now is at 700. So Meta at $500.
That's the split.
Yeah, Meta at 500 is a very cheap stock versus BlackBerry at $3. $3 is very expensive for BlackBerry because, again, you need to know how to evaluate the business. So lots of myths around the stock market.
So that brings up the next question then, is like, with somebody who's extremely busy for day-to-day work and they want to dabble into this, how do they actually, like, what are the main 3 steps or the 3 things that they should know before they even get into the stock market to start doing it in real time?
So it's basically starts with number 1, you put your mindset. You need to change your mindset that you need to learn how to invest properly. Number 2, you cannot risk any money while learning. You can't just go in first day, put money and say, I'm going to try. You're going to lose the money very quickly. So what I usually do is ask everybody in my program to open something called a paper trading account. A paper trading account is an account whereby you open it for free and you don't need to fund it. So you don't have to put any money in, and they give you $1 million monopoly money. Everything is real. It's like simulated trading. Everything is real. The stocks are real. The prices are real. So you can try whatever method you're learning with absolutely no risk of losing. So if you make money, you're not going to take the money. If you lose money, it's really not your money. So it's a very good way of learning. So, and this is important, that you don't risk your money while learning, because you're going to make a lot of mistakes. Like if you're doing 3 grade math and you're in grade 2, it's new to you. You got to make mistakes. You can't just go thinking that I'm going to design a rocket, not knowing the math, right? So you got to make mistakes. You got to allow yourself the space to make mistakes. Number 3, you got to learn. And I got to say this as well, that YouTube is a great way to learn, but it's not enough. You cannot learn how to ride horses by watching YouTube videos. You cannot learn how to swim by learning YouTube. At some point of time, you need to jump into the pool with a mentor. You have to. So find a mentor that is good with a package that will work for you, because what the mentor will give you is the feedback. Somebody that maybe a friend of you, doesn't have to be a mentor, a friend that knows what they're doing. You need the feedback, because I myself cannot learn something through YouTube, and without the feedback loop to figure things out and identify my mistakes and learn from my mistakes and correct my mistakes, it becomes very difficult. So 4 things: mindset, that is something that you need to learn. Number 2, paper trading account, so that you don't risk your money. And by the way, you don't go into live investing or live trading, except when you prove to yourself through few months that you can make money in paper trading. Because if you're not making money in paper trading, why do you think you can make money in live trading? Like just not logic.
Yeah, because you're going to play like you practice.
Exactly.
Yeah.
Learn a lot and find somebody can give you feedback.
So how did you get into this? Was it something that your parents said, or your kids was like, hey, you know what?
No, my parents are very risk averse. I am too, but my parents are very traditional. So for them, anything other than the 9 to 5, I'm wasting my time. So the way I got into this, as I said in the beginning, because I wanted to be wealthy, and I know that 9 to 5 will not make me wealthy. So I searched. So I worked a lot on my real estate, did a lot of mistakes in the beginning. And then I figured, and when you start, usually you make mistakes and you get the wrong people to teach you.
Which
And
is
then,
true. There's a lot of them out there.
but I was lucky. I did not, even with the mistakes, I still made very little money till I found a group that are really, really good here in real estate. And I learned a new system of investing in real estate. And I did I had a lot of success in real estate. And then in stocks the same way. I started with paper trading and it's great. It's really good. Also, one of the very important things in this game is to control your fear and greed. And this is kind of what everybody does not do in the stock market. They're all fearful. That's why there's volatility in the stock. If the stock value is $50, sometimes it's going to go at $5, sometimes it's going to go at $100. Why? Because if there's a lot of greed, people will have no issue buying it at 100. And if there's a lot of fear, people will just sell it at 5. So controlling your fear and greed and understanding what is the real value of the stock is very important. If you're too fearful, you will do nothing. And if you're too greedy, you will
Everything.
just basically get yourself into stuff that is very risky and you're going to lose the money very quickly. So it's a lot of balance. So for me, my program is called the Growth Program. And it has like 5-6 elements. The first one is having the right goal, the G. If you want to double your money every 2 months, good luck. You will lose your money very quickly because think of it this way. I'm near Toronto. If I need to drive to Florida, it takes 24 hours driving. If my goal is to reach Florida in 3 hours, what will that do to me? I will have to drive at 900 miles per hour to reach there in 3 hours. If this is my goal, it's just a matter of time till I get involved in an accident. It's of course, right? So having the right goal and level setting yourself about 24% ROI is really good number. It's double what the market can give you. So setting the right goal. And the reason I'm saying that, a lot of people I talk to and they tell me, Fadi, 24% is very low for me. I need to double my money every 3 months or so. And I tell them,
Wow.
it's not consistent. They can't do that consistently and you will be putting yourself in a lot of risk. But anyway, so that's the G. And then in my opinion, the strategy or the way to make money is just 10% of the equation. What's much more important is how to not lose your capital. So if you spend 1 hour figuring out a strategy, you need to spend 2 hours to 3 hours figuring out how other people lost money in this situation. Because why assume that you're smarter, right?
Yeah.
So learning how to risk mitigate and what are the risks. You can't go into the stock market with the behavior of a 2-year-old crossing the street. They're oblivious of the risk. You can't just move on thinking there's no risk because again, it's a disaster waiting to happen. So 10% strategy, 30% risk mitigation, and then 60% psychology, learning how to deal with fear and greed and that's what makes the difference between a person and another. You can learn the same strategy, but one person will do very well, like Warren Buffett. Another person will do really bad because they can't control their greed, for example. All of that and the right goal is also not enough. If you're taking all of that, but did not implement, did not train, not watch YouTube videos, you need to train.
Yes. Build the muscle memory.
A lot of people, a lot of people who take video courses, the statistics say that about 3% of people who buy a video course finish it to the end. Imagine only 3%. And you can imagine out of the 3%, how many of them are brave enough to implement. So you need to implement, you need to do train in a paper trading account. And when you have all these concepts, few things like these are basically 4 pillars or so. Number one, there's theory and knowledge. So you learn that in the strategy. Number 2, there's the coaching element so that you can get feedback. Very important. You can't move on reading the same thing, thinking you understood it, but you don't, or you don't know how to implement it. Coaching is very important. Third is structure. For example, in my coaching program, when you meet with somebody, whether a friend or a mentor, once every week, we're all very busy and there's a lot of distractions from the phone to Facebook to everything. So you need this structure so that once every week you renew the promise and you get focused back on what you need to do. And the fourth thing is paper trading so that you don't lose money while you're training. So these are the 4 pillars. It's basically in the growth system that I do believe everybody should try to assemble somehow so that they can have success.
That is great because sometimes we don't look at things or try to well, not look at things, but we actually try to align things so that it actually aligns with our goals. So having those 4 pillars, and if any of those pillars actually align with our goals in the future, that kind of helps out to make sure we're on path, if I'm understanding that correctly.
It's a very methodical way. Like, if you can't sleep at night because you're afraid that the stock will go up and down, then you're doing it wrong. You're speculating, you're gambling, not really investing. Investing is actually very calm, very slow. You can have really good ROI, but it's really slow. It's boring. Yeah. You should not be taking adrenaline rush from like investing in the stock market. It just means that you're doing it wrong.
Yeah, I used to get excited about certain things, but only because I invested and everybody else said it was a bad investment, and it actually turns out to be okay.
Okay.
Like, I mean, I always throw this stock out there. Everybody that listens know I do it. It's the stock IONQ because I like quantum, but I've been talking about it since they were like $2, and now it's hovering around 40. But at the time of this recording, of course. But people laugh like, "Well, I don't understand it." I was like, "Well, you don't need to because it's where it's going." But it's just fun from that point. But since we're in the future side of the house, what areas of focus do you think you can improve on in your life?
My corporate life is about engineering, project management. So right now that I'm running this coaching business, I found out that I'm really terrible at marketing. So
Okay.
really terrible engineer. I don't want to talk on Facebook. I don't want to do sales or anything like that, but it's an area of growth for me. So again, like a champ I taking a lot of courses. I'm being at podcasts to try to tell people about the good thing that I'm doing. I'm starting to do Facebook videos. I'm posting every day on it's very hard for me. I'm not that type of person at all. But here's the thing though. The bigger the obstacle, the bigger the challenge, the more growth you will do. So I'm determined to be good at this somehow.
There you go.
I'm still figuring out my way, because when you're not good at something, you're in a dark room. You don't know where's the door. So you have to try a lot of things. You have to allow yourself to fail, because there's a lot of failure in the dark room. And of course, I'm learning a lot, and not everybody's telling me the best thing, but I'm finding my way. I'm making progress. So that's that.
That's
That's
good.
the main growth thing for me.
So, because one of the things is you brought up fear, and when it comes to fear in your life and or even in your career, it's just like it seems like you like to tackle your fears and really face them head on, like one and just kind of like take chunks at it. Like, you know what, I'm gonna figure this out one way or another. Is that something that you like instill
I
like your
don't like
people?
tackling my fear. I just don't have a choice.
You don't have a choice.
I don't have. It's not that I like tackling my fear. Is that it's how hungry you are. If you want to be successful at something, it doesn't matter how fearful are you from the stock market or real estate. You gotta start. It's not that I want to, because it's very uncomfortable. Like when you're growing, it's very uncomfortable. You have to go out of your comfort zone, meaning you have to be uncomfortable,
Yes.
right? So it's not that I like it. It's just that I guess like anybody else, I postpone. And then one day I said, listen, if I keep on doing this, I will never get that skill. I will never do this thing. Fine. I'm going to open the camera and be on a Facebook Live. Right.
There you
So,
go. Yeah.
even changing my LinkedIn to say that I'm going to go from being whatever corporate guy to a coach was a huge mental block for me, because I'm not used to something like this, to open up to something like this.
Yeah.
But again, once you do it, 6 months after that, saying, how stupid I was. Why was this a big deal? It's not a big, but if you keep on pushing yourself, you look back and say, wow, I've moved a lot from that point. And then you wonder why was it such a mental block for you at that time? I remember the first time I signed a contract in real estate, my hand was shaking. That was how uncomfortable I am, because I have no idea, though I took a lot of courses and I figured out I had mentors and stuff.
Right.
Again, you don't know what you don't know. So right now, I have absolutely no fear. I can sign again I can sign like 5 contracts a day if I need to, because I have experience, right? And I went through that. So the first time you do something, it's terrifying. But what choice do you have? right? What choice do you have, right? It's the price you have to pay so that you don't pay the cost of not acting. And success, I know that success is not about learning at all. There's only one function. Remember this math thing when you have functions? So success is a function of only one thing, action. It doesn't have to be the right action, by the way. That's why I noticed that I really don't need a high IQ to succeed in anything. The people who do a lot of action. So I have few people, like even in real estate, I see people who are like me, engineers, who analyze things to death and do this paralysis because I want to do the best deal possible with the least amount of money, highest ROI, all this stuff. And then I spent 2 years analyzing something. And then I have this guy beside me who is like third of my IQ in terms of analysis potential or analysis capability. But because they go and do stuff, they have action, their learning curve is very fast compared to me. Because I didn't do anything in 2 years because I'm just stuck analyzing stuff, the guy did already 5 deals.
Wow.
And even if 3 of them or 4 of them are bad, he got experience. He doesn't repeat his mistakes or her mistakes. And so success is about function of action. Doesn't have to be the perfect action, doesn't have to be the right action all the time, but you have to move on as long as the action doesn't kill you, right? Like, like
don't buy the end of the action.
Don't take all your money and buy lottery tickets and call that an action. That's not an action. That's suicide. So it's about action. So once I figure out that, you know what, the pain of not acting, the pain of not having the result is higher than the pain of acting, whatever the comfort zone that I'm going out of, then I would say I won't have a choice. I have to do it. But I don't like it. So I just had to comment.
And that's a good takeaway for the person that's listening right now to really dive into. It's like, what is something that you've been analyzing for so long for? Why don't you just go down and take the action and just do it?
Yeah, but it's hard. It's hard because you're afraid, and people are afraid of few different things. People are afraid of failing.
Public humiliation.
Yeah, public humiliation. They want to save face. If I don't fail, at least I'm now better. I'm now not a success, but now at least I'm not a failure. Believe it or not, people are also afraid of succeeding.
Yeah, I can raise my hand to that one.
People are afraid of succeeding because they don't know what to do once the next step they had some success in. So I know it's very hidden, but people are so afraid of failing. And here's the thing, if you are not willing to fail enough, you'll not succeed. Look at anybody who's good at anything. A researcher that won Nobel Prize for some, or Michael Jordan. I think Michael Jordan, every time he pushes the ball, it scores? No. Like, you know, how many times he had to train and how many times out of how many balls he throws, how many goes into the baskets, right?
Yep.
3? I don't know, but it took a long way to go from 1 to 3. So you gotta, think of it this way. You gotta fail more. If you don't fail, if you're adamant that you're not going to fail, I'll tell you, you'll never get success in anything, basically, bottom line.
Yeah, one of my favorite quotes that I like to use is that a professional or a master only become a master because they failed more times than you even tried. And I was like, wow. Because it's like you have to do something. Like, yeah, I mean, I can go on a tangent about failures all day. Like, we both have good share stories. But this is not a failure episode, failure podcast. We want you to succeed and learn through the stock market and be successful. But going back to, like I said, just go with the paper trading, learn from it and master it and fail a lot before you start utilizing your real money.
Yeah. You can't do well in an exam, math exam at school. You have to train and fail in the training, right? You have to do a lot of math problems, go wrong, learn from it, and then move on.
Yeah, I have this is my calculus book from high school. That's why I was looking at it. And most calculus people would know the famous red book. I love this thing.
So you can't do well at a calculus exam. You have to do a lot of wrong, right?
Yes.
And that's called training. That's called doing exercises, right? And if somebody does not want to do the exercises and fail in them, what are the chances they're going to do well in an exam? 0, right?
Exactly. Well, you ready for the final 4? Because like I said, we can talk all day about this one.
Yeah.
You ready for the final 4 questions?
Yes.
All these final 4 questions are the last 4 questions of the show, just so we can learn a little bit more about you. But these are quite rapid fire. So,
Okay.
All right. So, number 1, what does wealth mean to you?
Wealth means freedom. And there are 12 types of freedom.
Okay.
For me, the main ones are time freedom, location freedom, and control, freedom of control. So I want time freedom. I don't want to have a 9 to 5. So that's first freedom. Location freedom. I want to be anywhere in the world. And I've designed my life to be like that. I can go anywhere in the world and keep on my coaching that I like to do. Third is freedom of control. I don't want someone like a manager to tell me what to do. So wealth for me is it's not really about the money. It's about the freedom that comes with it. Thing is, you can't have location, time, and control without the financial freedom and the wealth.
Can you go through all 12 right quick, just so people will know?
I don't remember them all.
I got them for you if you want.
You know what? I can just ask ChatGPT, what are
I have all 12 if you want them.
12 types of freedom? So we talked about 4 already, right? The financial freedom, the time freedom. There is career professional freedom. If you are not wealthy, you cannot choose where to do. So for me, I'm choosing coaching, though really it's not completely lucrative up to this point, but I love to do it. And when you love something, you can spend a lot of time doing it, and you're in this state of flow that you can spend 5 hours not knowing that, you know what, that was a 5-hour coaching session. Why is it that I'm giving all that time? Not really. I'm enjoying it. Health freedom, basically physical and mental well-being. A lot of times I was in jobs that was really affecting my health, but I didn't have a choice. Emotional freedom, liberation from fear or anger. So when you have a good nest egg and you know what you're doing and you're not fearful of things around you. Spiritual freedom, basically living your life in alignment with your faith. Relationship freedom. I don't have to be friends with anybody because I don't need any, I'm here to help people and be in the relationships that I want to be, attracting good people around me, and I don't have to deal with bad people because I have this freedom. Education, knowledge freedom. A lot of people choose the way they learn about something just because they hate it, but just because this is where wealth is, they go to that. Of course, political and legal freedom, and then creative freedom and purpose freedom. There is so many types of freedom, but for me, the main ones for me is time, location, control.
Love it.
Control over my life, not other people. Just to be clear. I want control people. I just want to control my life.
That's a whole nother show. Number 2, what was your worst money mistake?
Made so many mistakes. So in real estate, for example, I, in the beginning, because I didn't have a lot of money, I learned something called no money down. So I used to buy houses, and in closing, they give me money. So it's very weird. The problem is that these types of houses are very run down, and we call it D houses in D areas. So there's A, B, C, D. A is the very affluent, big houses in very nice locations. I used to buy C and D houses in C and. So the type of tenant is really C and D, the type of people drunk all day. So, but because this is what I wanted to do, because I didn't have a lot of money, that's what I started with. And what is really amazing is that was a big mistake. So I had few properties like that and struggle collecting the rent, but I still did not lose a lot of money. I actually made, at least I was breaking even. So it wasn't that bad. So that was a big money mistake. Another big money mistake is that I bought a motel at some point, and again, it was run down, and I did not have the money. I thought I can run it without fixing it. That's another money mistake. Third mistake, in stocks in the beginning, I didn't know what I didn't know. And I used to, in stocks, you can, like same as in real estate, you can leverage. You can, like in real estate, you can go to a bank, get 80% of the money, you pay down payment 20% and buy a house, which I will always do in real estate. In stocks, you should not be using margin at all.
Margin calls.
Because it's very risky. And at some point, I did not know that. And of course, I paid the price because you make 3-4 times the profit. So you make a lot of profit very quickly. And then when the market goes down, stock market, one of the issues with the stock market compared to real estate is that it's very volatile. It goes up and down very quickly. So we know it's going to go down. I didn't know that at that time. So when it goes down and you're leveraged, they do something called a margin call. Basically, you give back all the profit plus your capital, big portion of your capital. So again, I was so lucky that I wasn't it didn't really wipe me out, but there's some positions that I took, I made a lot of money. But right now, if I look back at them, I was stupid. I was putting myself in a lot of risk. I'm so happy that I did not lose a lot. Anyway, that's why you should start with paper trading, right?
There you go. Like getting back to that training option. Number 3, is there a book that inspired your journey or changed your perspective?
Cash Flow Quadrants. And for sure, Napoleon Hill, Think and Grow Rich.
Yes, they like so golden. Number 4, what is your favorite dish to make?
Dish to make.
Yes.
Okay, I'm originally from Egypt, and I really, really love this beans dish. And in Egypt, we like the food very delicious and very unhealthy as well. So it's a beans dish, but we put a lot of oil and spices and tahini and a lot of really nice stuff. It's really good, very heavy. I make it heavy, but it shouldn't be heavy. It's really very healthy dish. It's a beans dish full of protein, but it's just the way the stuff that I put out in it makes it very tasty and a bit on the unhealthy side as well.
What's the unhealthy part? What's healthy?
Lots of oil. Sometimes we put margarine and butter. We're very creative in how to make it unhealthy. So
yeah,
really good at that.
Awesome. All right, so this is the very last question of the show, which is, where can people find out more about you?
Okay. So I'm on all social media. So my company is called Legacy Wealth Builder Academy. So my website is legacywealthbuilderacademy.com. I'm on Facebook, Fadi Habib, FadiHabib. I'm also on LinkedIn, Fadi Habib, Instagram as well. So look me up. YouTube is very important as well. I have a lot of videos, a lot of podcasts. So and I gave you the links. If you can put them, that would be great. But search for me, and then I do a lot of free training as well. Like attend some of I'm also on Meetup. So find me somewhere and attend some of my free events.
Awesome, Fadi. Thank you so much for coming through on the show. For you who are listening, I want you to remember that you do have what it takes. Just remember that you just need to practice, and it's okay to use paper trading. And yes, you're going to look like you won some money, that you did not use your actual money. It's okay. But this is all part of the training, because once you get out of training, this is how you're going to be operating in real world. So please go on and take the punches while you're training. Learn everything you can and be comfortable in the strategies that you want to take from this, because remember, personal finances are personal. So remember, be safe, be out. Peace.
Thank you.